Understanding nominal values, definition and implications in finance and economics. What is a nominal value? The nominal value of a security, commonly known as its face value or par value, represents the redemption price of that security. This value is explicitly stated on the security itself. When considering different types of securities, the nominal value indicates the amount that will be returned to the investor at maturity, irrespective of market fluctuations. Nominal value extends beyond securities. In economics, it refers to a monetary value that hasn't been adjusted for inflation. In contrast, real values account for inflation and reflect the actual purchasing power of money over time. Understanding nominal value in securities. Role in bonds. For bonds, the nominal value, or face value, is the primary instrument determining various financial metrics, including interest payments and yields. Here are some key points regarding a nominal value in bonds. Redemption at maturity. The nominal value reflects the amount returned to bondholders when the bond matures. Common face values for bonds are $1,000 for corporate bonds, $5,000 for municipal bonds, and $10,000 for government bonds. Market price relation. A bond's market value may differ from its nominal value based on prevailing interest rates. For instance, if a bond's yield to maturity, YTM, exceeds the nominal interest rate, or coupon rate, the bond trades at a discount. Conversely, if the YTM is lower, the bond trades at a premium. Discounted cash flow calculation. To evaluate a bond's market price, investors often utilize present value calculations. The formula for calculating bond market value includes the sum of present value of future coupon payments and the present value of the face value. Example of bond calculation. Consider a corporate bond with a face value of $1,000 and a coupon rate of 10%. If the market yield, YTM, increases to 12%, the calculation would resemble \text bond price equals \frac $100 1 plus 12% plus \frac $100 1 plus 12% caret 2 plus \frac $100 1 plus 12% caret 3 plus \frac $1000 1 plus 12% caret 3 \. The result of this calculation yields a bond price lower than its nominal value, indicating that it is being sold at a discount. Nominal value of stocks. In the case of stocks, the nominal, or par, value plays a different role. Here are some key aspects. Arbitrary value. The par value of stock is typically assigned an arbitrary amount, such as $1 or less. It is primarily a tool for accounting purposes when companies issue share capital. Market value disconnect. The market price of a stock typically far exceeds its nominal value owing to supply and demand factors. For instance, if a company has authorized to raise $5 million with a par value of $1, it can issue and sell up to 5 million shares. If sold at $10 per share, the additional $9 per share constitutes the share premium. Preferred stocks. The nominal value is significant for preferred stocks, as it's utilized to determine dividends. For example, a company issuing a preferred stock with a par value of $50 and a 5% dividend will pay out $2.50 per share annually. Nominal versus real values in economics. In economic discussions, distinguishing nominal values from real values is crucial. Not adjusted for inflation. Nominal values do not adjust for inflation, making them less useful for historical comparisons. For instance, nominal GDP represents the current market value of all goods and services produced in an economy without considering price level changes over time. Real rate of return. Investors tend to focus on real values to understand the true impact on purchasing power. The formula for calculating real rates is \text real rate equals \text nominal rate \text inflation rate. For example, if nominal GDP grows by 5.5% and inflation is at 2%, the real GDP growth reflects a more accurate increase of 3.5%. Nominal and real exchange rates. The concepts of nominal and real values also have implications for exchange rates. Nominal exchange rate, this refers to how much domestic currency is needed to purchase a unit of foreign currency. Real exchange rate, this metric adjusts for price levels between countries and provides a clearer picture of international competitiveness. It considers the ratio of foreign prices converted to domestic currency. Effective exchange rates, the nominal effective exchange rate, NER, and real effective exchange rate, RR, are used to assess a country's currency value in a broader economic context. The NER is a weighted average of exchange rates, while the RER adjusts these values in light of domestic and foreign inflation rates. Conclusion. Nominal values serve as a fundamental component in the evaluation of various securities, particularly bonds and stocks, establishing a baseline for understanding their market worth. In economics, distinguishing between nominal and real values aids in making informed financial decisions, ensuring that investors factor in inflation and purchasing power when assessing their investments. Whether dealing with securities or analyzing economic indicators, a solid grasp of nominal values is essential for investors, economists, and financial analysts alike.